The second part of Tutorial Series 2 of Bite-Sized Corporate Reporting will look at a question relating to borrowing cost. A link to the question is included in the description. As always, we will start by looking at the question requirement, which is to discuss the accounting treatment relating to the relevant costs incurred in the construction of the administrative office in the financial statements of ABC Limited for the year ended 31st May 2023. In this question, there are two issues to be dealt with. One, the construction cost. This falls within the scope of IAS 16, Property, Plant and Equipment. Given on completion, the building shall be owner-occupied as it would be used by ABC Limited as its administrative office. 2. The loan interest. There are two possible accounting treatments, that is either to recognize the interest as an expense in the profit or loss, or capitalize the amount, meaning the interest incurred is added to the cost of the building, if it meets the capitalization criteria of IAS 23. IAS 23 stipulates borrowing costs directly attributable to the acquisition, construction, or production of a qualifying asset should be capitalized as part of the cost of the asset. Directly attributable are those borrowing costs that would have been avoided if the expenditure on the qualifying asset had not been made. In this case, as the loan was taken specifically to help finance the construction of the administrative office, it meets the directly attributable criteria. Furthermore, the administrative office meets the definition of a qualifying asset set out in IAS 23. A qualifying asset is one that necessarily takes a substantial period of time to get ready for its intended use. Although IAS 23 does not quantify the term substantial period of time, an asset that normally takes more than a year to be ready for use will usually be a qualifying asset. Therefore, since the period of construction is approximately 18 months, this indicates that the administrative office is a qualifying asset. ABC Limited should commence capitalization of borrowing cost when it first meets all the following conditions. 1. Incur the expenditure for the asset. 2. Incur the borrowing cost. And 3. Undertakes the necessary activities to prepare the asset for its intended use. Thus, although construction began on 1st August 2022, the loan was only disbursed on 1st September 2022, indicating all the conditions were first met and capitalization of the borrowing costs shall commence from 1st September 2022. Next, as construction of the building was suspended from 1st November 2022 and recommenced on 1st February 2023, ABC Limited should suspend capitalization of borrowing costs for the 3 months period of November 2022 to January 2023. The loan interest during this period shall be expensed off to the profit or loss for the year ended 31st May 2023. In the financial year ended 31st May 2023, ABC Limited shall recognize a total cost of $4.2 million as part of its property, plant and equipment, comprising of 1. Construction costs incurred to date of $4 million, and 2. The directly attributable interest cost of $200,000, being 6 months interest on the loan of $5 million at 8%. Finally, no depreciation shall be recognized in the financial year ended 31st May 2023 relating to the building, as it's not ready for intended use, given construction is estimated to take approximately 18 months. This concludes Tutorial Series 2, where we looked at questions on tangible non-current asset and borrowing cost. Till next time, thank you.